Hi, welcome to the Market Alert for Thursday, the 29th of November 2018. So yesterday, if we look at the daily chart, we can see that the pound moved higher, closing above the 76% retracement. But this coming late on in the session when Powell spoke yesterday, and the impact of his words affected both the Dow and the pound because the dollar fell out of bed. Let's just have a look at these comments that were made. We see here, stocks soar as Powell abandons hawkish long way from neutral stance. Now in October, Powell had said that they were a long way in raising rates to what they believe to be a neutral stance. What that means is basically the rate increase is having no impact on the economy and also the markets, but of course it has. And December we'll see a potentially another rate hike, which is likely to be the last for some time as well. So he's changed what he said in his October the 3rd speech and has reversed this on Wednesday, saying the Fed is just below the neutral range. And this sent the dollar plunging, as you can see the dollar index dropping sharply. In the bigger picture, it's not really a big deal. We'll just expand this out and bring this across, and you can see yesterday we've had days like this before without the Fed chairman actually speaking. So again, this is a bit of a nonsense to be honest with you as far as reporting this. It's amazing what you can do with a 5-minute chart and how you can make it look more dramatic than what it is. However, that said, it's interesting to see that they're getting worried because their actions, whether Trump's had a word in the boardroom with him, I don't know. It's supposed to remain independent, but it's interesting that all of a sudden this happens. Another article here that says why Powell's speech today was a stroke of genius. By easing the, as it says here, easing the Fed's public stance on rates, he put all the responsibility in near-term market directions back on Trump's shoulders. So we'll see. I mean, Trump has been moaning about Powell increasing interest rates. And of course, now he's made this statement. And again, it's all it is semantics and wordplay, of course. So we'll see how it pans out. But we'll come to the Dow in just a moment. The pound yesterday managing to move high, eventually got to the 200 bar moving average but couldn't hold and came back to where it started, more or less 76% retracement, and then blasted through when Powell spoke at the Economic Forum yesterday. So watch out for, let's get rid of this 76% here, and let's just draw in a few other upside targets. Certainly taken away the Brexit issue in the pound for yesterday. However, as soon as this dies down, we'll be back with the Brexit issue, which is far bigger than what the interest rate is going to be in the US and whether they're going to raise rates or not in December, that's for sure. News today, ECB Super Mario is speaking today. He's out at 8 a.m. early on this morning. Keep an eye on that. I don't very much doubt he'll say anything about what Powell did yesterday. Be more focused on the European central bank's approach to all of this. Another one who, Goldman boy, and frankly, you know when he's lying because his lips are moving, as they used to say of George Bush Sr. So anyway, back to here, the pound moving towards the upside from here down to here. Watch these two levels. You've got the 128 and the 129, nearly 130 level here on this 76% crucial area for the pound there. Meanwhile, in the Dow yesterday, up 600 points overall. Start off with the daily chart, you can see it. One problem here, we haven't got the volume back in this move. It's a volatility short sell futures job, again a VIX trade, driven the market up. We're above the 200 bar moving average, looking fairly weakish overnight here. And again, the rhetoric and the semantic language of the Fed really doesn't, you know, for me, it isn't going to make it a fat lot of difference longer term for this market. There's certainly a downtrend in progress here at the moment, sideways at the moment inside of this trend. If we were to do it this way, just draw across here, there's a sort of a triangular pattern there that's developing in this market. So there is some resistance around. I think longer term we're going to return to the downside, and also you've got the situation of overvaluations, of which Powell talked about yesterday, although he tried again to massage this into saying that it was normal. So I think once the opportunity to move the markets higher yesterday is realised, that it's, you know, one day isn't going to change the trend, and the trend at the moment seems to be sideways to lower, and prices will resume that in the new year. We've got the Santa rally, of course. I wouldn't be at all surprised if we don't see that. It adds to the bonuses for the year because they haven't really made anything this year, and that will boost bonuses, and then in January and whatever, it'll be back to normal. There'll be no more rate hikes in overvalued markets. The only thing that's going to do that is more printing of money to move the economy. So yesterday the market started off with a buy signal. We got above the 200 bar moving average. We came back through this. The market tested, and then once we were back through, it was fine. And then this is just before Powell spoke, and then it was all the way, and simple as that really. Once we'd got back in, that wasn't the 200 bar average. Apologies there. The 200 bar is here. So once the market had got back through the 50 and 20 here, already above the 200 bar average in the pre-market session and the Tuesday night overnight session there, I think. There you go. No, it was in the day session, Tuesday's day session there. So yeah, and Bitcoin also higher yesterday as well. Could do with a bit more volume in this as well. This didn't really have the volume backing it. Nothing to do with what Powell said. This went beforehand. Look at the chart there. You see this was just before lunchtime. Not linked in any way to the Federal Reserve at this time. The market was quiet to begin with, and then all of a sudden we got a break to the upside. And as I said in yesterday's alert, the upside wouldn't surprise me, given the sort of semi-climatic action in the volume over the last week or so, which you get a shakeout to the downside and then bring the market back. And the key here is this. You'll be looking, if this is the top it's in today, you want to make sure that to confirm, you don't want to see the market go back below 3652 in order to move higher. So prices come back and then do this. And if they break this level, then they're going to come down, retest the lows, bounce back up, and then they'll go through this way. That's how it works. Okay, that's it for this one. Anything to report, I will let you know. But as ever, thanks for watching. See you in the next one.